Elect Trump's win caused a big rally in markets. Gold has fallen nearly 6% since his victory. Joining us with whether or not you should buy the dip is James Cordier of OptionSellers.com's. James, welcome, and make your case for gold here.
Well, Kelly, it's interesting. Back in July, when gold was trading around $1,365 an ounce, everyone was bullish. Everyone was talking about much higher prices. And the fundamentals simply didn't justify the market going up then. Of course, we know what happened to the rally. Now we're sitting around 1,200, and now seemingly everyone is bearish the market. We have a strong U.S. stock market. We have strong stock markets around the world. We have a very strong U.S. greenback at 13-year high today. So now the market seems to be falling down. It appears that the trick to trading gold is understanding what's already factored in and what is not yet factored in. And we see fundamental changes coming in 2017 that a lot of the people selling gold right now are not factoring into the market.
By the way, that's kind of the trick for trading anything, right? Trying to figure out the known knowns and the otherwise.
I mean, why, James, why wouldn't you find some bearishness in gold? It's been in a bear market for 5 years. It's down over 40% in dollar terms the past 5 years. So I'm not sure why we're talking about it as if it was just recently the best thing we could imagine, and now it's come off a little bit.
It certainly has. Mike, the key to gold rallying next year is the velocity of money. For the first time in as long as you just mentioned, 5 years, we haven't had velocity of money in the United States. It is about to pick up. We're going to continue hearing Janet Yellen and all the Fed governors talk extremely hawkish over the next several meetings. When the cameras are on, we're going to have a tightening Fed. However, behind closed doors, we feel they're thinking something quite different than that. The U.S. Federal Reserve and central banks around the world are dying for inflation. That is the one key missing ingredient right now to get the world economy moving. And once we start getting that next year, we're going to see a completely different scenario.
Bringing a Guy here, because Guy, I mean, I don't know, what gold trades off of, but it seems to me like in recent years it was, I don't know, it didn't quite seem to be the velocity of money. What do you think?
I think it trades off the fear of, what had been until the last couple of weeks, apparently, the fear of fiat currencies around the world. Now everything is sort of on its ear, so it's very hard to figure out what it's trading on. But, I mean, to me, that's been the reason to own gold, because the global central banks are tripping over one another to try to devalue their currency. Obviously, over the last couple of weeks, it's very hard to figure out what's going on. I'm sure everybody at home loves to hear the strengthening U.S. dollar, but I can tell you categorically, the guys and gals that work at the Federal Reserve are not probably all that thrilled about it. I mean, that's just fact. So they talk a big game in terms of wanting a stronger dollar. They really don't, though.
Also, James, I mean, the gold had its best first quarter in like 3 decades this year, and that was when markets were selling off. There was panic. There was basically a flight to gold. So why would you be saying that now velocity would be the reason to expect gold to rally?
Kelly, for the first time in many years, we see wage inflation here in the United States. We're going to see infrastructure spending, whether it's half of what President Trump talks about or if it's all of what President Trump talks about. We're going to see raw materials purchased. We're going to see wages going up more in the United States. That is more dollars chasing fewer goods, and that equals inflation.
No, I agree. But just to be clear, listen, of course that dynamic could play out and the velocity of money could pick up, but why is that indicator good for gold when gold just had its best quarter at a time when things looked their worst in the first quarter of this year?
The fundamentals for gold are reversing. For the first time, we're going to be talking about inflation in 2017. Gold is a barometer against inflation, and for the first time, we're going to see people talking about inflation at 2.5% and 3%, and the Federal Reserve letting it run hot to get the economy on very firm footing. That's the big difference between last year and this coming year.
All right, James, thanks for joining us. James Cordier of OptionSellers.com. Quick last word before we let Guy